Yo, what's good, boys? Um, got another case study for everyone. I've been doing, I look tanned, doing a lot of studying, and this I don't think has been talked about on my channel yet. However, this one video could potentially change a lot of the way that you see the charts in the market. Especially for beginners. If you haven't learned this before, then yeah, put your listening ears on, because this is potentially a very eye-opening video for you. So we're going to start with, we're actually going to start on Discord. We're going to go to my announcements. So the question of the day was, picture this: you're trying to short during London session to put your stop loss at the high of the day. You look at the daily, but you see you've opened higher. What's the highest probability outcome for this setup? Now, in other terms, what this means is, we'll just do here. That's our open. We've opened high. Where are we going next? Let's pretend that this is the daily candle, because everyone on here, majority, I don't think I have swing traders that learn from me, because I'm an intraday. Intraday meaning you trade the daily range, the daily candle. So the question is, if we open high and we're trying to short during London session to put our stop loss at the high of the day, what's the highest probability outcome for this? Say we've hit an imbalance. Well, actually, that becomes... Okay, let's not get ahead of ourselves. So, for a daily candle, let's just... how can we draw this? For a daily candle to have a low, you must have an open. Let's just say that's our open. Let's say we open here. Ignore this line. We're actually going to take it off. So in order for a daily candle to print, and any candle, however, if you're an intraday, you're trading the daily range. In order for this daily candle to print on a bullish day, price will need to come down, create a low, to then move up to create a high, and then close around the high. So on a bearish day, we're the same. We need a high of the day for then price to move in the opposite direction, to then make a low of the day, to then close around the high. So this is literally how the candles print. It's been right in front of you the whole time. If you've ever wondered what these numbers meant, open, high, low, close, it's been right in front of you the whole time. Trading isn't supposed to be hard, but people become pattern traders of simple PD arrays or glorified PD arrays from certain people. It's been right in front of you. This is how the market prints open, high, low, close, this is going to be a bearish day. If this was a bullish day, it would be open, low, high, close. This is how candles print. There's literally no other way. So back to the question. You're trying to short during London session. That's a time aspect. To put your stop loss at the high of the day. Now, if this isn't a valid open, high, low, close, and this isn't just a fake move to then go lower, to then make a new high of the day. If this isn't the fake move, and I'll explain to you how you know if this is the fake move or not. In order for you to put your stop loss at the high of the day, this must open high to then expand lower to then move up and close to then start the cycle again. Open, high, low, close, and we can just add a candle in to represent what this would look like in the chart. This is it. This is how candles move. This can be your holy grail. Now, back to the question. And originally I had a today chart example. However, I did think we could do a case study along with the real life chart example. So it's current price plus a case study. So what should we do first? Let's do current price. Yeah, let's do current price. Now let me drag this tab over. Okay, this is current price. This is, what one should we start with? Okay, this is a monthly key level, and the reason that we've chosen a monthly key level is because we've got a 4-hour CRT, which means we need a daily key level. However, there is none. So we then resort to the higher time frames. Now remember, high time frame isn't bad. High time frame, the higher the time frame, the higher the probability. However, so we've got a 4-hour CRT right here. We've got our key level. Now this would always come first, but I'm just telling you the time frame alignment. This is a 4-hour CRT, but the key level was a monthly. We've been in this big monthly imbalance for a while, and this volume imbalance, I believe. I don't trade volume imbalance, but yeah, all this price action is highest probability, especially when we get to the 50% of this fair value gap. So regardless, key level, we've got a monthly imbalance. We've also taken out buy side right here. It could also be 1, 2, 3, like a 4-month order block right here. So key level, CRT, perfect. We've got a CRT here, CRL there. Happy days. 2-hour time frame, we've got a micro CRT inside of this 4-hour range. We've got this high, this low. We purge this high, we take this low, and the original draw on liquidity. Now we won't get into low time frame yet. Remember how I just showed you open, high, low, close? This was a bullish candle. Open, low, high, close. This is a bearish candle. Open, high, low, close. This is another bearish candle. Open, high, low, close. This is a bullish candle. Open, low, high, close. This is a bearish candle. Open, high, low, close. This is another bearish candle. Open, wasn't really a high, might have been a micro pip, low, close. Now you can do this with every single candle because that's how it prints. However, this is our framework for this trade. We've got our key level right here. We've got a higher time frame CRT with a micro CRT inside. Now the main thing we need to use, this is the day that we're trading right here. If we was trading this day, we'd care about this move up. However, this is the day we're trading, so we care about this move up. In these moves up, if we put our stop loss at this high and ride it to the low, is that not a trade? Every candle has got the potential to be a trading opportunity. Even this little candle, we opened, we moved higher, we then went lower and closed. From here to here, that could be a trade. Open, low. From here we could be getting in, closing around the high, and bang. Same with here. Well, this is what we're going to get onto here. We open, we push higher, low, close. Open, low, close. Because this is the third candle, it's going to be a big distribution candle. The manipulation is already done in this CRT, if you want to say that. Now you could also say, why did this then provide a technical shorting opportunity? Because we've taken 50% of the range, so it's now looking for a KOD entry if it wants to complete this whole cycle. Now jump onto the lower time frame. As you can see, it's marked the 4 hour, 2 hour, 2 hour, 4 hour, 4 hour, 2 hour, 2 hour, 4 hour. This is a high time frame PO3 candle indicator, which is very helpful. As you can see, ignore all the stuff on the charts, focus it here. Midnight open. This is the opening price for the daily range. We move lower, which is an irrelevant move. We put in a high in our kill zone hours from 2 to 5. That is our high, which matches up with time. And I didn't want to make this video too complicated. However, do your research on why the kill zones are kill zones. Start with the Fed wire reserve, times that they operate. I'll give it to you now. The Fed wire reserve is a clearing house, and they carry out high value orders from big hedge funds and big investors. And if you do your research, you'll find out why these kill zone times are kill zone and why 8:30/9 New York time, you'll see a high liquidity point of an injection of liquidity into the markets, and it will explain a lot. Same with 2 to 5. So do your research. Start with Fed wire reserve, type up their timings, their sentiments, and then so we've got here, this is a fake move. Why is this a fake move? It doesn't hit a higher time frame key level. So we open, we move high in our kill zone hours. Whereas a thick bullish candle that purged this 2 hour CRH and also revisited this 4 hour CRH, it is this one. So from this low, we'd wait for it to close above. As you can see, model 1, we close below, activating this order block. We've also got another turtle suit right here, making it even higher confluence. we then close past, we put our limits on the model 1, and we can write it to the micro draw on liquidity and the major draw on liquidity. And as you can see, this is what it would look like for RR 2.41R. So we are actually at 15 minutes. Now, do we make this? Yeah, we'll do 2, it's fine. So, oh no, we'll do part 1 and part 2. Okay, yeah, we'll do part 1 and part 2. We'll do part 2 now. So, let me go and record part 2 now. Watch both before, make notes on both, because they both go hand in hand. There's the same theories, the same facts. So you make notes on both, but this is going to be a trade that I executed on FX Replay to show that I'm not just a hindsight trader. This is how the markets operate. This is the easiest way to do it candle by candle. And yeah, so this is going to be part 1. I'm going to record part 2, and I'll see you guys in a bit.